Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, August 4th, 5:34 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida with the Big Show, the Friday edition of the Revere Market Insight video where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. Yesterday, we added short-term caution to the uptrend market stage. You can see over here on the upper right on the trend gauge, today we downgrade leaders from bullish to neutral, also downgrade the short-term trend from bullish to neutral with multiple closes below the 21-day moving average for the S&P and the NASDAQ 100. This is being led down by tech stocks. The big seven, specifically Apple today, down 4.8% on a disappointing reaction to earnings. So what the NASDAQ 100 giveth, the NASDAQ 100 can taketh away. And that's what we're seeing right now because of the heavy weightings with these stocks. We've been calling for a while for reversion to the mean. We're getting more than we bargained for here. On the bright side, the Dow, small cap indexes, and mid cap index are still above their short-term 21-day moving average. That's why we didn't go to bearish, but just downgrade one notch to neutral. Medium term, all five of the major indexes are still above their 50-day moving average and their long-term 200-day moving average. So for now, this is just a short-term caution, short-term correction, and an overall long-term and medium uptrend. So what happened today? If you had any questions about whether or not the short-term caution label was warranted, the afternoon action in stocks definitely cemented it. Very confusing reaction to the action today, and really increased volatility and the, let's just call it, weird bearish action started after the Tuesday after the close downgrade with the credit rating of the U.S. by Fitch. And since then, we really haven't seen much good in the market. Before the open, the jobs report came out, and there were fewer jobs added than expected, but average hourly earnings were above expectations. That's inflationary. The market, the futures initially popped, then came back to red, and then by the open, they were solidly green again. And then we went lower, higher, lower, higher, and then lower again. You'll see when we bring up the shorter term action on the day, but the bottom line was a very ugly outside negative reversal, cementing our short-term caution label. Here are the final numbers on the day. Our 8 growth ETF composite, the RG8, down 0.7%. S&P 500 opened up 0.33%, pushed that gain, but by the close, and it was a close near the low, over a percent reversal from high to low, down 0.5%. NASDAQ 100, pretty similar action to the S&P, down 0.5%. The Dow down 0.4. Mid caps just barely negative. Russell 2000 small caps down 0.2. Global diversified 60/40 stock and bond up 0.11. This was led by a big bounce in bond prices. So yields coming off a bit after three big day increases in yields. They pulled back a little bit. We're going to need to take a look next week at what happens to yields. But at least today on the red negative numbers, you couldn't blame it on higher yields because yields were in fact pulling back, and that was our thesis with the yields pulling back for why we were rallying late morning. But like I said, afternoon it got ugly. In-house GROTECTION down 0.46%. We had a couple more stops hit. We'll talk about our portfolio changes when we get to the tail of the tape. Let's dive right into it. Here's the S&P 500, and you can see, let me blow this up a little bit. You can see First of all, the shot across the bow last Thursday. Then this past Wednesday, the gap down closed at the low right on the 21. Then yesterday, a second close below the 21, but we finished off the lows. Actually, this we closed on the 21 on Wednesday. First close for the S&P below the 21 was Thursday. And then today, take a look at this intraday action. I'm going to bring up a 5-minute chart here. So we got the gap up, and then we extended the gains up to 45.30 before an absolutely quick and harsh reversal of 0.75% brought us all the way down to 4,500. And just as quick as we dropped, we bounced. The bounce extended itself up through lunchtime with a high of 45.40. So that 45.30 level that we had been talking about acted as resistance in the morning. We pulled back, we got up to it, and it acted as resistance again, but then broke through it up to 45.40. Let's take a look at this 30-minute chart, and I'll highlight this 45.30 level, which has been a battleground for a couple of weeks now. But then a really vicious sell-off in the afternoon. You can see it on the 30-minute chart. Back to the 5-minute chart, we just spent 30 minutes above 45.30 and then gave it back up again. An anemic attempt at a bounce, couldn't get back above 45.30. And then these three candles right here, this 15-minute period started right at 2 o'clock, started with a big negative reversal on Apple and harsh selling on Apple. And then we just dripped lower into the close, closing very much near the lows of the day. So the bottom line, emotions doing 180s several times today, but closing at the lows of the day, failing to get back above the 21-day moving average certainly cements our short-term cautious thesis. Now, 44.78 with the close, where this breakout from 712 is still intact on the S&P. But certainly with the action lately and the decrease in our beta by over a half over the past week and a half, we're pretty content with where we are and how we played it. Let's go to the NASDAQ 100. Similar outside negative reversal, got back above the 21, lower low, 3 closes below the 21 now. Let's take a look at the Apple chart very quickly. Gap down on earnings. Rallied a little bit. Here's where that sell-off really started, 155, 2 o'clock, and really selling off Apple. And because of the big weight that it has in the indexes, it moves the NASDAQ 100 and moves the S&P 500 pretty dramatically. So like, let's compare that to Amazon, which was up 8% today, but Amazon is less than half the impact in the NASDAQ 100 and the S&P 500. So 5% down in Apple more than offsets the 8.3% move up in Amazon. And you can see Apple here, clear change in character, broke the 50-day moving average. We've got a handful of clients that have unrealized gains in Apple, taxable gains. We hedge them using AAPD. Basically, I love these ETFs for this purpose, these inverse ETFs. It's a single stock ETF, trades inverse to the underlying. Apple down 4.8%, the underlying AAPD up 4.79%. This is a great tool to be able to keep from having to pay taxes on gains for some clients that have legacy big gains on Apple. But you can see this is very clearly a change in character. Hard, big volume break below the 50-day moving average and close at the lows of the day on a weekly chart. It's ugly, taking out the gains for 1, 2, 3, 4, 5, 6, 7, 8 weeks in one day. And that's the market. That's how it works. Let's move on to the Dow Jones Industrial Average. Big negative reversal there too, but just versus the 8 EMA, as continuing relative strength shows on the Dow, still above the 21-day exponential moving average, still above this 34,600 breakout level. Mid caps also showing relative strength today versus their large cap NASDAQ 100 and S&P 500. We undercut but closed right on the 21-day yesterday. We got above the 8, reversed, but still closed above the 21 on mid caps and didn't undercut. So again, you can see the strength of Apple and the impact on those big cap indexes. So what the Nasdaq 100 giveth, it also taketh away because of the weights of those big seven. So MDY holding up okay here, just barely negative on the day. In fact, MDYG, the growth half, was positive on the day by a tenth of a percent. Let's go to IWM. Outside negative reversal. No, not outside. Negative reversal. Outside, it means that you made a higher high and a lower low. Wasn't outside. Didn't touch the 21, made a higher high. Down on the day, but just 0.2%. Acting fine, showing relative strength. So very possible that money might be flowing out of some of these big seven and into other sectors. One disappointing sector today that had been acting well is industrials, XLI, breaking below the 21-day moving average. This has been one of the leaders as the market broadened out its leadership. Continuing leadership, though, is in energy. Made a new high and reversed negative, still finished positive on the day, but money very clearly, look at the relative strength line over the last 3 weeks, has been flowing into energy. We've been playing that via the NRGU ETF, and we'll add a few energy stocks to the 21 over 21 when we get there momentarily. Let's go to the VIX now. After covering the 5 major indexes, you can see the VIX closing at the high of the day. Not surprising with the indexes closing at the low of the day, making a higher high above the 50 and the 21 now and above this 15 level. This is reflecting the increased volatility that we've seen since that big negative reversal last week that started right here on the 27th. Let's go to the dollar. UUP dollar down today. So again, uh, you couldn't blame a weak dollar for the reversal after a nice move up or reversion of the mean move today. With the gap down sitting on the 50-day moving average. If the dollar was weak, you would expect precious metals to be strong, and they were. Here's silver, but up just barely. Here's gold, up a little bit more, up 0.36%, but below that declining 21 and 50-day moving average. Gold stocks fared a little better, up a percent after 2 horrible days of selling, 2 anemic days of a bounce on gold stocks. Check Bitcoin very quickly, BITO, down 1% on the day, consolidating at this lower low level versus recent prices. So not looking good there. And we stopped out of our Bitcoin miner today. I'll talk about that momentarily. Let's flip to bonds. After 3 strong down days in price, meaning 3 strong up days in yield, we got a reversion to the mean bounce on the broad bond prices, almost reclaiming the last 2 days of losses, up 0.83%. Let's go to TLT, the 30-year. Big bounce too, just reclaiming the last day's bounce, up 1.78%. Let's go to TYX. This is the 30-year yield. See the negative reversal there, down 2.1%, still above the breakout level. Just too far, too fast on this. We'll have to see what next week brings us. And the 10-year 0TNX down 3%, as I said, with the broad bond market regaining or giving back the yield gains, almost all of them from the past 2 sessions. So that's all the inter-asset correlation that we show. Let's go to the tail of the tape now, and then we'll get to the 21 over 21. So we've got a lot of red up here. Stochastic for all the indexes negative, RG8 negative, NASI negative, dollar is strong, that's a negative, yields near their highs, that's a negative. VIX elevated above the 21 EMA, that's a negative. Fear and greed subsiding a bit to 69. AAII bulls were up 4 ticks compared to last week. From a sentiment standpoint, that's a negative. So with multiple closes below the 21 now, we flipped short term from the bull case to the bear case. As I mentioned with the news, NFP less than expected. Prior 2 months also adjusted lower. Fed Chair Powell likes that. Average hourly earnings, however, above expectations. That's inflationary. The day count, stop counting the rally now. Uh, Third day down, multiple closes below the 21 on a short-term bear case. Third close below the 80 EMA, second below the 21 EMA on the S&P 500. Expectations now negative, with the S&P and the Nasdaq being below the 21-day moving average. Negative, I just touched on a bunch of negatives, but keep in mind we are still above the 50-day moving average. We do invest on 3 time frames. We don't go all in or all out depending on what's going on with the 21 EMA. That's, probably 40% of it, but we give the market the benefit of the doubt as long as it's over the 50-day moving average in the indexes, which all 5 of them still are. But that doesn't mean we're going to get hyper aggressive on things just to be chopped up the way the market did today. We're certainly wary of the difference between a healthy market where all pullbacks are bought and a risky market where all advancers are sold. And the selling of the rally this week is what's been prevalent and really ruling the day. Also, ATR ticking up a bit. This is with the volatility ticking up, not a surprise, but it had been contracting for a while the market was advancing, and that's typically what you see. Lower volatility move up. Now the volatility is picking up a little bit as the market has pulled back. That further cements check marks in the negative column. Positive sectors today: gold, and silver stocks, oils, ITB, nice bounce at the 21 EMA, and KRE banks holding up okay. On the downside, bond yields, the dollar, tech, utilities, real estate, semiconductors, and software stocks of all type down. In-house and portfolios, we bought UPRO at the move back above the 21-day moving average. Then we had that negative reversal. We offset that with our add to our inverse NASDAQ position. So these two kind of offsetting each other. We sold SIM and MARA. We'll take a look at those charts momentarily. So reducing our beta further from 1.3 to 1.14, or 14% above what the S&P 500 is. Our floor, as long as we're above the 50-day moving average, is 1.0. That's to keep us from getting overly negative in a market that hasn't broken down. That doesn't mean we won't short some things that are weak or go long things that are working, such as oils, such as some agriculture stocks, which you're going to see one added to the 21 over 21 list today. But the bottom line, outside negative reversal cements the short-term caution approach. Let's get to the 21 over 21 now. Let's start off with what was punted this week. Eight stocks leaving, and here they are: Coin, COIN. After that big move up on the a couple of weeks ago, it's been 3 weeks now, on Coin and on Bitcoin, just nothing but selling off. They reported earnings, the choppy action after the earnings, but bottom line is 3 closes below the 21 takes it off the list. MongoDB, this has also been very volatile this week. Outside negative reversal, third close below the 21, it takes it off the list. Ferrari, the shakeout after its earnings, but then 2 days lower, 3 closes below the 21, takes it off the list. Unity Software, reported earnings, not liked, bouncing at the 50-day right now, but 3 closes below the 21 takes it off the list. Stop me if you've heard that before. Generac, terrible reaction to earnings. Didn't even have to wait for the week to close to take this one off the list. Dave & Buster's had been volatile, but selling off, multiple closes below the 21, and it's gone. And finally, nope, not finally, next to last, Palo Alto, big negative reversal, gap down. This was on Fortinet's extremely disappointing earnings yesterday. Off the list, and also Uber, which we own and got stopped out of our last piece yesterday, breaking below the 21 also. So those are the 8 stocks that got punted. Let's look at the 8 additions, and let's take a look first at the big seven Nasdaq stocks. Well, first let's take a look at what we sold, Mara, and why we sold it. It had been consolidating nicely around this 21, several attempts at a bounce, all ended up getting sold. We bought that this week. It was going to go on the 21 over 21 list, but no, because we sold it and it closed below. Plus, they've got earnings next week, so we had no cushion to sit into earnings. And SYM still going to be on the 21-21 list after its big move up on earnings, but just too volatile. We were negative to close the week on this, not taking a chance with it. We had a couple percent loss on this. Uh, Down week, negative short-term market. No reason to sit with losers and wait till you get stopped out. You can always buy them back. So the 21 over 21 list now. Oh no, I'm going to go with. We already showed Apple below the 50. Microsoft on earnings below the 50. Those are the two biggest weights in XLK Tech, which is now below the 50-day moving average. Also the Nasdaq 100 and the S&P. Next up, let's go to the winner of the day, Amazon. Closed at the low of the day, big gap up, huge volume, great report. The question is, can it dodge the market headwinds? Because if Apple pulls down the Qs and some other stocks are pulling down the Qs, it's a headwind for Amazon. Kind of weird, but big weighted stocks in an index, they're pulled down by the index. It's going to pull the price down of the individual name. Google, decent chart, gap up on earnings, holding it, sitting on the ADMA, holding the cup and handle breakout also. Meta, also looking fine, pulling back after its earnings move up. Tesla, we still own this, holding the 50-day moving average, really needs to hold the 50-day moving average or we're going to be selling some stock. And NVIDIA, still on the 21 over 21 by the skin of its teeth. It's a rounding error, whether it's below it or above it, but we still own it, so we left it on the list. All right, let's get to the list now, and we'll start off with all of the stocks that were added. And we're going to start off with what we've been using to play. This gets you 10 big oil names. Oil, very clear uptrend. Look at the relative strength line on this recently. NRGU, we own it. It's a well, plain and simple, play on oil, which has been going up. Restoration Hardware has been rallying nicely, not giving any of it up. Gave up yesterday's gains, but that was the market. But this has really looked good and still hasn't reported earnings yet. A play on very clearly the positive housing sector. Now, here's the new emerging sector. It's still rated pretty negatively, but Bungie, I don't even really know what the right term is for, but this has been, and stocks of this nature have been showing relative strength, a handle, reported earnings, not great earnings numbers, certainly not even going forward. But there's a drought going on. There's wheat issues with Ukraine and Russia. Gapped up on earnings, held the gap. Uh, we're trying to look at what the next new thing is, and it might be something like this. Let's also look at Archer Daniels Midland, which isn't on because the chart isn't as good, but same situation. They process agriculture, food and grain. Nice relative strength there, consolidating. So a couple of agriculture related stocks. One we put on, the other one was certainly considered. Okay, moving on. LNG. Michael listened to their earnings call, was just continued to be impressed. Big move up on earnings, actually positive reversal after an initial sell-off, and it's in a good sector. Look at the relative strength on it, as well as the relative strength in energy. PE of 5, and they basically have been printing money because of the needs through Europe. Adding LNG to the 21 over 21 list. Shack had a huge shakeout after its earnings report. Look at the volume. They've got a big activist investor shaking up their management team. Two positive reactions now to their last two earnings report added to the 21 over 21 list. We also considered Kava, didn't add it. IPOs are just kind of tricky to play. We usually wait till the IPO institutional due diligence phase, which takes months or years. But Kava, if you just want to play it against the 21, you can, but we went with Shack. Sim, we bought it, we sold it, massive earnings, uh, pullback along with the market still really holding the pivot. It was just a capital preservation move. Closing the week red, we never like to do that. EXTR, Extreme Networks, also looked at adding ANET, but great reaction to earnings, and this had been the leader. And again, a tale of two quarters. I talked about in the podcast this week, and make sure you check that out. Look how this gapped down on its last earnings report, like the sky was falling, and did nothing but go up since then, and then furthering the move on this earnings report. So Extreme Networks added. VRT, massive move up on earnings, 2 days higher high closes, and this market's got to get your attention. They make components for data centers, and we all know the AI data center theme is alive and well. VICR, we added this. These are all carryovers from last week. So those were the 8 new ones. These are all carryovers from last week. VICR, also electronic parts, big move up. No, this might have just been a short squeeze. We're keeping an eye on this to see if it can resurrect itself. But for now, it broke the low of the gap up day, which leaders should not do. Palantir, volatile, 2 days up, 3 days down. Earnings next week. Boeing, holding tight since its positive reaction to earnings. TBT, this is a way to play higher interest rates. 3 days up, 1 day back. We've already talked about that. Home builders holding at the 21. That continues to be a profitable theme. Freeport, Michael's dug into the copper story extensively. This is consolidating near the highs of its breakout level in a double bottom base. ONON, after the big shakeout last week, traded tight this week. AEHR, undercut and reclaim of the 21, trading tightly after its earnings move higher. Tidewater, well, we know what sector it's in. This has been on here for a while, and it just continues to chug higher. Earnings next week. SMCI, one of the strongest stocks in the market. We over 50% winner for us. Granted, not a huge position because of how volatile it is, but we still are holding a piece of this. Weatherford, another oil stock making higher highs. DraftKings, ugly reversal after the big earnings gap up, but it certainly has been acting well and held the 21. And as I mentioned, NVIDIA closing right on the 21-day moving average today. A couple others that were considered but didn't quite make it. I'll show their charts. ANET consolidating after its earnings move. Caterpillar, great earnings move up. 3-day pullback since then. XPO, logistics company, negative reversal today, but a gap up on its earnings report. I showed Archer Daniels Midland, I showed Amazon, and I showed Kava. So those were under consideration but didn't quite make it. And that is going to wrap up this week's big show. As always, love to hear from you. The email is don@revereasset.com. If you watch us on YouTube, please click the like button unless you don't like it. And if you don't like it, stop watching it. The choice is yours. We get hundreds of views, but very few likes. We'd appreciate it if you click the like button. It's supposed to help with the algorithms and get it on different people's streams so they can learn more about Revere Asset. Our phone, 855 Real Wealth. That's 855-732-5932. You can also email my partner, Dan Stewart, dan@revereasset.com if you're interested in some info on becoming a client. And with that, I'm going to remind you that it's not how much you make in the market, it's how much you can keep. We actively take the gains and when they're available there for the market, but we fight like hell to hold on to them when the market wants to take them back. That's the difference between us and typical pie chart advisors. And if you want more info on that, reach out to Danny. And with that, I will close the big show for Friday, the week ending Friday, August 4th. This is Don Vandenbord with Revere Asset. Just the facts here at Revere, just the market facts. They're not always good, but they are facts. And appreciate you listening and have a great weekend.